All right, let's get a check on the commodities market now. Yes, we did get that, the inflation numbers for August, and yeah, it's better, easing. Joining us now, we have Dr. Ifeoma Nwakolos, Assistant Vice President, Economic Research, Financial Derivatives Company, joining me right here in the studio. It's great to have you, ma. Good morning.
Good morning, laddie.
Yes, so it's another drop in inflation.
Yeah.
Just the way that pen dropped right now. That's looking at the data. But, you know, researchers can go deeper,
exactly,
into that data. Tell us what we're not seeing in those numbers.
Yeah, we saw the numbers came in yesterday. It was surprisingly came well below analyst expectations, even though the trend was on par with analyst expectation. The magnitude that we saw, 1.76% decline, and that tells a story. It simply means that, well, looking at all the inflation indexes, we find out that they all move in tandem with, except for core month-on-month inflation. Every other inflation indexes move in tandem with the headline inflation. They all decline significantly. This tells us that we are beginning to see inflation stoking factors easing. The transit factors are easing. Also, the structural rigidities are beginning to ease. And this can be attributed to harvest season, because last month we saw that month-on-month inflation increased and food inflation also increased. But this month we are seeing that food inflation declined significantly by 1.2%. And month-on-month inflation also declined significantly. So we are at the peak of harvest season, at the peak of harvest season of almost all the commodities, coupled with the fact that consumers are beginning to restrict their consumption. There's restriction in the consumption of consumers. Of course, we know that this season, we're in August, and schools just resumed yesterday. So back to school stuff, payment of school fees and all that.
Right.
So yes, that is part of the reason why you see we have surplus supply in the market, why demand is actually low. And also we saw that exchange rates have been quite stable for some time, and even appreciated in the parallel markets and remain flat.
So with these numbers now, because when we reel out the numbers, we're telling most of our listeners, investors, that inflation is dropping.
Yeah.
But that doesn't mean that if you go to the store now, you're coming out happy as a consumer. It doesn't mean your basket is fuller and you're not paying that much, to fill up your baskets, when you go to the supermarkets and the markets. Is that the story?
Yeah, that's a story, because we have what we call, even though we are seeing exchange rates decline, we are seeing all of these things, transient factors coming down, we have what we call transmission mechanism. There's always a lag to all of this. That's why we are seeing this. And also the purchasing power has dropped so much that even though there is decline, we are not seeing it translate into a better welfare for the citizens. So this is the gap that we are seeing in the short run. But I think in the long run, when we begin to see this, because transition mechanism takes between 6 to 24 months before you see all of these policy reforms begin to play out into have effects on the welfare of the people. So right. I think that is what we are seeing.
But looking at your slide,
income constraints.
I see domestic commodities, the prices are quite stable.
Yeah.
So I guess that's a plus. And
it's a plus.
Does it really speak to the data that we're seeing?
Of course. It's moving in tandem with the data, because food inflation actually declined massively, both annually and month on month. We saw a massive decline on food inflation. And as I said earlier, we are in harvest season, peak of harvest season, and almost all the commodities we're harvesting season for all the commodities. So that's why we are seeing commodity prices flat. Yes, all commodity prices, even import commodity prices are also flat. Some are even declining. The price of rice, which is one of the reasons why we have a decline in food inflation, according to NBS, is is driven by stability in the FS market. And we also know that since exchange rate has been stable, imported inflation, of course, we also decline. So that is why we are seeing prices remain stable.
But it seems eggs are quite stubborn. You know, looking at the slide there, I see a crate of egg. Previous price was about 5,000. Current price, according to the data, 5,007. So it seems eggs are stubborn.
Yeah, this could be because of the feed prices. Feed prices may remain high, like soya beans and maize. I think these are the major feeds used for poultry, and I think that is the reason why we are seeing this hike in the price of. Don't forget that we are in the ember months, so people are already putting out their chickens for sale, and once you put out your chickens for sale, you have lesser eggs. Yes, so that's why we are seeing maybe there are lesser supply of egg in the market, while demand is high because of Christmas season.
Right, Christmas. Oh, can't wait for the Christmas carols and all of that. But looking at the oil market now, we're seeing Dangote Refinery, they've commenced nationwide, fuel distribution, at this point with all of those trucks. What does this signify, for prices of fuel, going forward? Because I remember, years back, when December starts to approach, then you start seeing the queues come back. We've not seen queues anymore. All of that black market sale. They're all gone. And we're not going to see it this December.
We're not going to see it, yes. Yes, for 1 year now, I think that Dangote Refinery commenced, we have not seen queues. Yes, we cannot attest to that. And this latest development, which kicked in yesterday, is another plus for consumers. My major concern is the consumers, because if you look at fuel, you see that fuel is basically one of the highest or the largest expenses that both households and even manufacturers or producers embark on. This is where they spend most of their money, either buying diesel or buying PMS and all the rest. So once we see this, we're going to see more supply of energy. And once there's more supply of energy, it's going to have significant impact on sectors such as manufacturing sectors, telecom sectors, and the rest. And if that happens, of course, production cost is going to come down. Because since this has commenced, even though it's not actually going around now, the whole nation, because they just have 1,000 LNG trucks. So I believe that when we see more of the trucks coming, it's going to go around. For right now, they are just focusing on Lagos, Southwest, and 5 other states, like the Federal Capital, Abuja, Delta, Edo, Rivers. So I think that's the major focus for now. But subsequently, I know that once the trucks come in, of course, they're expecting about 4,000 trucks. So once they come in, I think we are going to really see the impact. One, in logistic costs, which is going to impact prices. Also in production costs. Because if production costs declines, if you come to production, fuel is about 40% of production costs. So when this happens, of course, we are going to see it translate into cheaper prices of commodities. And we're going to see, once prices decline, of course, demand will increase. And when demand increases, of course, that demand for labor is also going to increase.
So once demand of labor,
yes, it's going to have like a multiplier effect on the economy.
Fantastic. Well, we're waiting to see prices continue to fall down, and we actually feel it when we go into the market strongly. Thank you so much, Dr. Ifeoma Nwokolo, Assistant VP Economic Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me, Ladi.